Good morning, everybody. Thank you so much for joining us for our webinar this morning. This is Megan Grove, the Customer Engineer at MX Data, and we are happy to announce our partnership with our friends at Avalara, who will be hosting the webinar for us today, talking about tax compliance solutions for retailers. So I would like to introduce Octavia Gerby and Brian Kenny, who will be leading our presentation. And of course, if anyone listening in has any questions throughout the presentation, please feel free to put your questions in the questions box and we will address all questions at the end of our presentation. So Octavia, do you want to take it from here?
Yes, ma'am. Thank you so much, Megan, and thank you for letting us come chat with your customer base today. We really appreciate it. So hello, everybody, and thank you for attending the 5 Steps to Holiday Readiness session with Avalara and MX Data. As Megan mentioned, if there are any questions during the presentation, please drop them in the chat box and we will be sure to get those answered. And then just to show you some of the faces of those chatting with you today, I am Octavia Gerby. I am a Strategic Alliance Manager here at Avalara. I manage the partnership with Retail Pro and their resellers like MX Data. And then Brian Kenny is on with us as well, and he is our dedicated Retail Pro sales executive at Avalara. And both of us work very closely with Megan at MX Data, who was so gracious as to ask us to come present to you guys today. So for our agenda today, we are going to discuss why sales tax matters. We're going to touch on the start of the 2022 holiday season and what to expect. We will touch on the brick and mortar sales side of the business as well as an e-com update. And then we will also have 5 steps to ensure holiday preparedness. And again, if you guys have any questions, please let us know throughout the presentation. So I wanted to start with a little bit of information about Avalara. We are a world leader in tax and compliance. We were formed in 2004, and we started out as a sales tax automation company only. And as the landscape of tax and compliance has changed, so have we. So we actually remitted $12.9 billion in sales in used tax in 2022 alone. But as you can see, we are not just a U.S. solution. We understand that businesses have various needs all over the world, and so we serve customers from 95 different countries with far more integrations and API calls than any other competitors in our space by far. So on to the fun conversation of why sales tax even matters. First and foremost, for every state that has sales tax, they all rely on state and local taxes for their revenue. It is a pass-through tax because you as a seller collect the sales tax directly from your customers and remit it back to each respective taxing authority. As you can see on the stat on the right shows that nearly 24% of state and local tax revenue comes through sales tax collections, and that is second only to property tax. And so it's a huge part of the state's revenue sources. When we're talking about state revenue, states were already projecting budget shortfalls before COVID, and it is estimated that states were expected to run a $290 billion deficit in 2021. Obviously, the relief efforts and delayed deadlines throughout COVID were great and necessary at the time, but ultimately, they've made those deficits that much worse, and so states are having to respond to that. And with such a high deficit and a loss of revenue for the states, as you can imagine, they're looking to prioritize efforts to recoup those losses. COVID caused states to put on hold auditing efforts, but as the world has opened back up, we're hearing an increase of sales and use tax audits. And one of the unique things that came out of COVID is that we're now hearing about virtual audits. Gone are the days where auditors would have to come into the building. Now they have the resources to do that audit remotely, which adds another layer of complexity. States will also continue to make more goods and services taxable, where those items were historically non-taxable. And this is just one way that the states are going to try to add to their revenue. We will also see a lot of rate increases. Recently, we saw about 12 to 15 states announce a rate increase effective April 1st of this year. And with such a big source of revenue coming from sales tax collections, it's no wonder that the enforcements are going to continue to ramp up. So I want to get into what you guys are all really excited to talk about, and that is what to expect this holiday season. In some way, this holiday season will look the same as previous years. Of course, retailers can still depend on Thanksgiving, Black Friday, and Cyber Monday to have the most sales, but those days aren't expected to grow as fast as other days during the holiday season. 14% is the new high for both the growth rate and the amount spent by shoppers, and the National Retail Federation predicts that the holiday season shopping will begin in October, similar to last year. All of the advertisers are trying to get out in front of the holiday buyers sooner so that these people can spend some more money. And with the holiday season starting a little bit earlier, it's important to get a handle on your supply chain and inventory now to help with that rush. Last year brought a chip shortage that halted production of electronics. Container ships were stuck in ports, and there were shortages of truck drivers. And we've all heard the stories. But because Amazon and Walmart have such a huge presence, they drove their e-commerce sales in 2021 because they could solve some of the supply challenge issues that smaller businesses couldn't. And retailers that could form partnerships, innovate in other ways, and prioritize which products were most important to get off their shelves also fared a lot better than others. But it could be years before the supply chain breakdown is fully resolved, the New York Times reported. The number one thing you should be doing for holiday readiness is to make sure that you have a supply chain and a way to get those goods to your customers in time. And we all here are customers. I'm sure we're all shopping for our families this holiday season, and we understand the importance of getting what we want in a timely manner, making sure those presents are under the tree, and not dealing with those supply chain issues. And on the note of getting products into your customers' hands, Nexus becomes particularly complicated when you start to use third parties to drop ship your orders. And drop shipping is confusing for everyone. Even here at Avalara, where we talk about compliance all day long, drop shipping is a conversation that gets very tricky. It's not always clear who is responsible for collecting and remitting the sales tax, and you may be on the hook to collect resale exemption certificates in some cases for those types of sales. And so it's important to know how drop shipping or using a warehouse for inventory or even delivery of your products can affect your Nexus footprint. Ultimately, that's requiring you to register in a state that you may not have thought that you needed to. So ensuring that you're compliant during this holiday season is going to be super important. Online sales have dominated the last few years, and we all know the reasons why. But as a surprise to some, the National Retail Federation is predicting an increase in foot traffic within brick and mortar stores this year. While talking with Avalara, one of the NRF board members mentioned earlier that there's been a pent-up demand to shop in stores, and it said that assuming the pandemic situation improves, retailers will likely see greater foot traffic during this holiday season than they did in 2019. Also, stores are serving as more than just a place to shop. Shoppers continue to appreciate flexible shopping options like buying online and picking up in the store, or even curbside pickup. The pandemic saw omni-channel retailers using stores as fulfillment centers, a trend that seems likely to continue as we explore creative strategies to meet the increased demand. One example of this is Target, who actually fulfilled 96% of their e-com orders by shipping products directly from its stores. And on that note, retailers looking to drive foot traffic might take a lesson from the Target playbook. Stores should also seek to differentiate themselves from the e-commerce experience, which can't replicate face-to-face interactions. Making a visit memorable with surprise and delight moments can turn first-time buyers into repeat customers. And it's always nice to go into a store and shop. And when customers do, you want to make sure that it is worth their time. But don't let the foot traffic predictions fool you. Many customers are still shopping online this holiday season, as I'm sure many of us still are. Now, while online purchases were significantly slower than the 2022 holiday period, sales are still up 55% over 2019. Cyber Monday sales dropped 1.4% to $10.7 billion, but the day still remains the biggest for online shopping of the year, according to Adobe Analytics studies. Growing awareness of supply chain challenges and product availability led many consumers to not want to wait around for a discount on Cyber Monday or Black Friday. The pandemic actually spurred a lot more people to shop online. The question that remains is whether that's a permanent new behavior or if they will return to buying products in a brick and mortar store. And I'm sure we'll be able to tell in the next few years how the customer wants to shop. But what's really happening is people are spending more, and so both channels are actually going up. E-commerce isn't going to capture quite as much of a total sale as it did in the peak of the pandemic when people were afraid to go into the stores and e-com was the only option, but it will remain a very strong, consistent option for buyers. I know myself personally, online shopping is the way to go. You never know if a product is going to be in the store, but when you're online, you can tell if that product is in stock. So I know for myself personally, online shopping will probably be the way to shop moving forward. But it is important to be aware that advertising on digital channels can trigger click-through nexus. Under click-through nexus laws, your out-of-state business can establish a physical connection to a state through an agreement or reward a person for directly or indirectly referring a potential buyer through links on their website. We are seeing companies go to a channel partner ecosystem. And with that ecosystem comes new obligations for sales tax compliance and making sure that you have a good understanding of how that affects your particular compliance landscape is going to be super important going into the holiday season. When you sell to buyers through multiple channels like your website and online marketplaces and social media, you're more likely to have economic nexus. Economic nexus laws are based on your sale revenue and or the transaction into the state. As your business grows and you reach customers in states you've never sold to before, you could exceed sales volumes or revenue thresholds. And if this happens, you'll need to register to collect and remit sales tax in those states. Once again, nexus, sales tax, and compliance can be difficult to get a handle on and know what is what. And you want to ensure that you're keeping your company out of harm's way. And nexus is one of the many things we discuss on client calls when speaking to Avalara to make sure that you are on the right track. So up until now, we've chatted about the various aspects of sales tax, the changes, etc. But let's shift gears a little bit and focus on the 5 steps to managing sales tax compliance. The first step in managing sales tax compliance is understanding your nexus footprint, which again is where you must collect and remit the sales tax. Once you understand where you've established nexus, whether it is physical, economic, or another type of nexus, you then need to get registered in that state. Upon getting registered, you now have a requirement to begin collecting taxes. Trying to calculate that correct amount of tax can be rather difficult, and we'll take a deeper dive into that in a little bit. Next, if you're making any sales to exempt entities like resellers, distributors, or manufacturers, you'll need to keep track of your exemption certificates and ensure that they're valid and current. I would also like to say that if you're selling to a nonprofit company or a school or a church, you would also need an exemption certificate on file for that as well. And making sure that those are up to date and valid can be a huge headache on whoever on your team is having to manage that. And then lastly, you'll have to file that tax return in those states and remit the sales tax liability to the tax attorney in a timely manner. And that could be monthly, it could be quarterly, or even annually. Now, while this slide may make it seem like these steps are simple, we all know that there is a lot that has to happen in each of these steps to ensure that compliance is maintained. It is super time consuming and complex, and it only gets harder as your business grows. And so I want to look at each of these steps a little bit closer so that you get a better idea of your responsibilities in each area. So first, the first step was to know where your business must collect. it is important to take a look at your business activities and know how they can trigger a nexus obligation. Physical nexus is definitely the most obvious and easy to identify. This could be where you have employees, where your employees may travel, such as sales reps soliciting businesses in other states or going to trade shows, employees performing services in other states, or a state where you may store inventory. But now you also need to consider where you're selling to outside of your current state and where you're registered. Are you hitting the revenue thresholds or selling over the transaction amount? Typically, the rule of thumb is $100,000 in revenue or 200 separate transactions. And it doesn't matter which one you hit, whichever one you hit first, that then will require you to register in that state and start collecting sales tax. I'd also like to mention on those thresholds that exempt sales in most states do count to that threshold. So you could sell $100,000 into a state to a reseller, and you may not have collected any sales tax in that transaction because you were selling to somebody that was then going to resell it. But because you reached that threshold of $100,000, you would in theory still need to register and start remitting sales tax in that state. Now, you may file a $0 return because there was no sales tax to be collected, but you do have an obligation to be registered in that state once you pass those thresholds. So understanding where you should be registered is the foundation of every tax conversation, because you can never get compliant unless you are registered in the proper places. And that is more important now than ever. So once you understand where you need to be registered, the next step is to actually get registered, right? Each state registration forms can be a bit different. Generally, states want you to get registered within 30 to 60 days of exceeding an economic nexus threshold. And the list to the right shows you the typical items or information that's needed to get registered, like the legal name of the business, when the business was formed, as well as a tax ID number. As we all know, life is not always simple, and in some cases, registering isn't enough. What if you should have registered 6 months ago, or a year ago, or even 5 years ago? If you're worried about past liabilities, Avalara has a process to get your current business up and running with the state, and to make sure that you don't get hit with a bunch of penalties, and then we will get you registered through our VDA process, a voluntary disclosure process. And that also shortens the look back period that states will dig into your business. So it can be very helpful if you should have been registered in states but are now trying to figure out how to make sure that you are compliant. Now, this slide is one of my favorite slides to show because calculating the correct sales tax amount can be very tricky. There are 12,000 different taxing jurisdictions in the US, and we have 46 states, including DC, that all have different rules and regulations around taxability and different tax rates. If we look at this example, which I absolutely love because it's outrageous, in Commerce City, Colorado, next door neighbors have dramatically different sales tax rates. One has 4.75%, while the other has 9.25%. If you're not already using an automated sales tax software, you're likely using zip codes and a rate file solution for managing sales tax rates. While this can get you part of the way there, you can see from this example that it's not always going to be accurate. Zip codes are intended for mail delivery, but they lack the accuracy that is required for sales tax. Sales tax calculation automation brings in efficient, accurate, and repeatable process for your company where you can be confident that you're gathering the correct sales tax. Now, I know that if I lived on this block, I would be trying to mail all of my packages to my next door neighbor because almost 5% tax increase is insane for next door neighbors. And I know this because I look at this PowerPoint every day. But if you weren't aware of this, you may be sending product and charging the wrong sales tax to two next door neighbors in Commerce City. And we want to make sure that your sales tax calculation is correct up front because that then leads to a better customer experience. So next we're going to touch on exempt sales. I know that we have a few resellers in the audience today, so I wanted to make sure that we touched on the biggest part of compliance for you guys. Businesses can be exempt from paying sales tax for a variety of reasons, which could be for specific instances or purchases, but it also could be that you're selling to an exempt organization such as the government or a nonprofit, or the item is being sold in intention to be resold. Ultimately, if you're not charging tax on a sale when you typically would, you'll need to collect an exemption certificate. Like the rest of compliance that we've discussed, there is not one exemption form for all. They do not look alike and they can be different state by state. And so it's important that you know that you're receiving the appropriate forms and that it is filled out correctly and that the information is accurate. If you're missing any forms or if they expired, it could certainly be very costly. For example, resale certificates in the state of Florida expire every year. And so you would need to make sure that year after year, you're getting a new reseller exemption certificate from any customers that you're selling to into Florida. And so some folks actually view each certificate as currency because missing a form could cost you hundreds or thousands of dollars in an audit. We actually spoke to a manufacturer in Illinois a few years ago who was missing 3 exemption certificates. They got audited, and because those exemption certificates were not on file, they were on the hook for over 6 figures in penalty and fines. And all because they didn't have a piece of paper to prove that they didn't collect sales tax because it was to an exempt customer. So it's really important to make sure that you have all of those forms and that they're up to date. And I do then want to remind you guys that economic nexus thresholds for most states do include these exempt sales. So keep that in mind as you're looking to figure out if you've gained any new obligations over the years. So next is going to be when to file. Once sales tax is collected, these funds need to be remitted back to the jurisdiction. Like I mentioned earlier, sales tax is a pass-through tax. So once you collect it, you send it to the respective state or jurisdiction. There are also several nuances when it comes to sales tax remittance that include paper versus online remittance, varying filing frequencies, and filing in local jurisdictions in places like Colorado, Alabama, and Louisiana. With those varying dates, it's important to ensure that you're filing and remitting your sales tax returns on time. So up until now, we've chatted about the 5 steps to managing sales tax compliance, and we can see that it's a doozy. Each state has different nexus laws, different registration forms, varying sales tax rates, rules, and taxabilities. We even have different exemption certificates and forms. But how do you streamline sales tax compliance? There's got to be a way to make this easier, right? The answer is yes, and it is with Avalara. So if you have questions around whether or not you should be registered in a state, we can help you with a sales tax risk assessment to help you understand your Nexus footprint and to provide insights on where you should be registered and then recommend a path forward. And I want you guys to remember that Avalara Nexus study because we're going to touch on that a little bit later in the presentation. Step 2, once you've identified those states, Avalara can help you get registered. So instead of filling out multiple forms with the same information, we can streamline that process and get you registered in various states and jurisdictions. Step 3 is to calculate, and we're trying to figure out and calculate the right rate. Avalara has an integration into Retail Pro and many other e-com platforms, as well as ERP systems, to calculate the sales tax rate in real time. You'll no longer have to worry about rates, rules, varying taxability, and setting up new tax codes or rates in new states. Avalara will take care of that headache. I will also mention with most of the customers here being in the retail space, there are a lot of tax holidays, right? Around back to school time, there are certain states that will make certain products non-taxable for a weekend. Avalara has that logic built into our system. And so you no longer have to go in and change all of that information in your POS system right before the tax holiday. We're going to do that on the back end so that you don't even have to worry about it, and you can focus on hitting your numbers for that day and making sure that your business is growing. So step 4 is going to be to track. And for those with exempt sales, we can help track, monitor, and report on your exemption certificates. And we can help you be more proactive through sending requests to solicit new and updated forms for customers. This is great for your current Nexus states and makes it easy to grow into new states while capturing those exemptions. This not only will help you stay compliant, but just as important, it improves the exempt buyer experience as well. And then lastly, step 5 is going to be to remit sales tax to the right authority. We can help automate the filing and remittance process. We will file your sales tax returns on your behalf, and then we will pay the states from an account that you fund, similar to funding payroll. This gets you away from the monthly process of filing multiple forms and paying various jurisdictions, completely offloading this frustration and time-consuming task, getting you back to more revenue-generating activities. As a bigger picture, here is the Avalara Tax Compliance Suite. Avalara helps retail customers in 2 main ways. I like to identify these as automating a process through software, and the other is helping your tax profile and tax strategy. We've talked about the majority of this on previous slides. The automation includes the integration to determine appropriate sales tax and exemption certificates and document management solution, and the automated returns and filing process will be there to file on your behalf. Now, everyone loves getting things for free, right? I think that we can all agree. So I do want to shift gears a little bit here and talk about a way that you may qualify for free tax compliance in certain states. One of the ways we help companies save money is through the Streamlined Sales Tax Program. It's called SST for short, but it is designed to simplify the sales tax process. Not all states participate, but right now there are 24 states. Avalara is a certified service provider for the SST program, and that means that Avalara was put through a rigorous audit process to be able to provide this service for our customers. So what does that mean for you? If you qualify, you get free registrations, free calculations, and free returns filings in the SST states that you qualify for. And here is a picture of the states that do qualify. It is a large portion of the states. And again, as I mentioned, if you qualify for this program, you receive free registrations, calculations, and return filing services. But even better than that, you will also get audit assistance in these states from Avalara. And if you participate in the SST program and that state audits you, they will come to Avalara and not to your door or email, which is a huge benefit for our customers. We are very passionate about this program that has helped businesses just like yours get compliant while offloading some of that cost to do so. And we would love to chat and see if this would be a good route for you as you are looking to automate and add compliance to your business. I will mention that some of the qualifications to be in the SST program is that you cannot have a physical presence in the state. You can have an economic presence, but you cannot have a physical presence. I will also mention that it is not all or nothing. You can choose to be in the SST program for a handful of states and not in other states. So let's say that you have a physical presence in North Carolina, but not in Tennessee. You can use the SST program for your calculations in Tennessee. You would not qualify in North Carolina because you would have that physical presence. But that is something that Brian Kinney can dig into a little bit deeper if this is something that your company is interested in. So why automate? You may be thinking, why should I automate my sales tax management? If you outsource payroll, the justification is essentially the same when it comes to sales tax automation. They're both really confusing, they're really hard to keep up with, and there's a lot of risk if you do it wrong. In sales tax, accuracy matters. We saw earlier that there's a risk in over and under collecting and trying to figure out the sales tax rates in 1,200 plus jurisdictions. It can be super time consuming. From an efficiency perspective, sales tax is not a revenue generating activity. Automation can help reduce costs and free up some time and have your staff focus back on some of the more important tasks. Now, I did want to share, earlier in this presentation, we touched on the importance of understanding your Nexus footprint. And so as you close out your 2022 business, it is important to understand if you've crossed any new thresholds. Until the end of the year, Avalara is offering our sales tax risk assessment for free through our partnership with MX Data. So please feel free to reach out to your MX Data representative for a link to take advantage of this promotion. You click the link. There's no need to put a credit card in, but you will get a questionnaire that you can fill in at your own pace. It is going to help you determine both your physical and your economic nexus obligations. And then you will get a full report back with a one-on-one consultation with an Avalara sales tax professional to help you determine what the next steps are for your sales tax compliance landscape. We have seen tremendous results from this promotion, and I hope that you guys all take advantage of this. Again, please reach out to Megan. She has a link that is unique to MX Data and their customers. You guys fill out that information, and then we'll have access to the risk assessment to help determine if you have more obligations that you weren't aware of. And with that, I'm going to pass it back to Megan to see if there are any other questions that may have popped into the chat while we were presenting.
Yes, we are getting some questions coming in. One in particular would be, can you kind of go back? They're asking what are the rules with e-commerce if you have an integration with Retail Pro? Do you only need one Avalara account?
Hi, this is Brian. I'd be the sales executive that could probably take that question. The way that it is currently set up, the brick and mortar or the physical location would have an instance of Avalara's POS or a connection with the Retail Pro POS, which would give you about up to 100,000 transactions per year. You can certainly use more if the store would warrant more, but that's a pretty modest cost because it's a static environment, right? It's this one, you walk in, you walk out, that store location. Tax rates may change, but it's a relatively static environment where the content doesn't change that often. If you were in an environment where people were coming to your store and they were shipping it to family members, or if you're in a tourist destination and you see a lot of what we call send sales, that would have to be segregated to a separate Avalara account so we could compensate for understanding the liability of the 13,000 jurisdictions where that product may go, right? Taxes based on the send to address. So if you see a lot of people walking in and sending things from your physical location, a second instance of Avalara would be needed. And typically that's not a huge number, right? But depending upon where your locale is or what type of product you're selling, again, a tourist destination where there's a lot of foot traffic, that number might be relevant. And therefore, yes, you would need another instance of Avalara to account for all those jurisdictions that are nationwide.
Thank you for that, Brian. The next question that I'm going to have you answer, Brian, is can we handle sales going into international companies? So US companies selling into Canada or maybe into Europe as well. Can we at Avalara help manage compliance for that aspect of the business as well?
Yes, we typically consider Canada a 51st state, for lack of a better word. There are some implications when you do sell stuff from a US-based entity into Canada, whether it's some taxes and duties. But yes, we have a plethora of cross-border duties, tariffs that can all be built in to make a much more pleasant buyer's experience. I'm sure people have heard stories where an overseas customer purchases something, and then when it gets to customs, the taxes, the duties, the tariffs weren't necessarily accounted for. The merchant ships it overseas. The customer says, whoa, I always thought I was going to pay $100. Now it's going to be $200. I'm going to just leave it there. And then that becomes problematic for the merchant. So yes, we have solutions that can account for, I think it's 106 different countries globally as far as the cross-border and understanding what tariffs and duties may be needed for that. Currently with that, there is what's called, and I don't want to get too technical, but there is what's called these harmonized systems codes, and each item of a tangible personal property item has a specific code. And when you utilize Avalara's services and utilizing these codes, that would massively increase the streamlined process from your store in the States to your recipient overseas, where it can travel through customs much more effectively with accurate HS codes. Those are things that can be bought separately a la carte, but the entire package of sending things overseas, managing the duties and the tariffs, so it's a fully transparent and a better buyer experience coupled with these HS codes, it becomes a very somewhat, I don't want to say totally seamless, but it becomes a very much more seamless buyer experience from your store to an overseas customer.
Thank you for that, Brian. And then another question that we have is, let's say that I'm not at a place to fully automate sales tax compliance. Is Avalara an all or nothing solution, or can we cherry pick what solutions we need, i.e. just having us manage your returns or exemption management?
The short answer is yes. Everything we offer is an a la carte basis. It depends on some of the products, whether it's a little more difficult. We tend not to, I shouldn't say we don't. We don't often be just someone's tax return filer, right? It's a little bit more of a complicated process. Because we guarantee the accuracy of the tax calculation, we guarantee the accuracy of the return filing, we guarantee the accuracy of it being on time, providing any potential early filing credits. And when we don't calculate the tax and we just file your return, some of those guarantees become moot, but we can do that. But that's not typically what we do. We're not typically just filing returns for folks. But yes, you can buy just the Avalara POS environment connection to Retail Pros, so you don't have to think about any tax changes in your brick and mortar. You can add the Avalara instance where you're sending sales. You can add in returns. You don't need to add returns. You don't need to necessarily have the exemption certificate management software. Everything is a la carte. So the short answer is you can pick and choose whatever products you think are the most effective solution for your business.
Perfect, perfect. And then my last question that we have for you is, let's say that we're running Retail Pro as a POS system, but we also are using an ERP on the back end, like a QuickBooks or NetSuite or something like that, that invoices are also running through. Does Avalara connect into multiple ERP systems to help calculate in every aspect of the business?
Yes, great question, because a lot of people do have multiple facets of their technology stack. And the short answer is yes. We connect or work with nearly 1,200 different technology partners, ERPs, e-commerce sites. You would be hard pressed to find an environment that we do not have a pre-built integration to. So wherever you're generating an invoice, wherever you're generating a return, wherever you're generating anything that has a taxable or a non-taxable event that needs to be captured, I can't say we connect to everyone, but with 1,200 connections and pre-built integrations, it's pretty safe to say that you'd be hard pressed to find one we do not connect to. That being said, if it is something we don't connect to, our API is an open environment, and I'm told, I'm no developer, but I'm told you can build your own API connection to Avalara. Again, I don't want to speak for developers, but as far as coding goes, it's apparently a somewhat relatively simply process where you can build your own API should that be necessary. But to answer the short question with the long answer is yes, we can connect to as many platforms as needed.
Perfect. Thank you so much for answering all those questions, Brian. I believe that is the end of our questions. So I will pass it back to Megan for a nice little send-off, but I appreciate all of you guys letting Brian and myself come in and talk about the not so fun sales tax compliance. We get it's not the most fun conversation, but we have a solution to make it a little bit easier. So if you have any questions, please reach out to Megan or Brian or myself, and we would love to chat a little bit more.
Thank you so much, Octavia, and thank you, Brian, for hosting today. And thank you for all of our customers that attended. And just to repeat what Octavia said, if you're interested in learning more or setting up a more personalized demo, please contact me and we'll get that scheduled for you. Megan at mxdata.com. So thanks again, everybody. Have a great rest of your day.
Thank you very much.
Bye.